This conference will now be recorded.
Good evening, ladies and gentlemen. Somebody please mute the microphone, please. Good evening. Good evening, ladies and gentlemen. This is USA Trading Frank. It's approximately approximately 8:53 p.m. on Feb 23rd, 2020. This is a Sunday night strategic webinar. We have members all the way from Northern Canada, all the way to the West Coast and overseas. So normally the 8:30, 9 p.m. type of time frame works for everybody. So let us begin. Welcome. This session will be recorded, uploaded to YouTube, the USA Trading YouTube channel, for viewing by everyone else at their convenience, hopefully before the market opens tomorrow. We also have a terrific Instagram channel that I like to remind everyone all the time to subscribe to, so you can see some of the highlights of some of the fantastic options trades that we do, real-time alerts, which are posted generally in the evening after the market closes. Please, I repeat, mute your microphones. We're getting a lot of static. It kind of breaks my pace, so please, if you don't mind. All right. So yes, so certainly follow the Instagram channel. On that note, let us begin. We'll try to keep things straight to the point and try to cover some important and relevant technical and fundamental issues, primarily technical, so we know what is going on. Right now, we have futures down roughly 41 points, which was kind of expected. That's why I told people to buy SPY puts. I have nothing, not a huge amount, but I have a decent amount, and it's going to be a payday right at the market open if futures open down 41. On top of that, a couple of trading notes and logistics. I did tell people to reduce the long positions, and most importantly, if you look at the last webinar, which was a few days ago, the headline, the whole title of the webinar, and I went through some substantial and very, very important critical points on market retracements and pullbacks, said warning, market warning. And that is, everyone who had a chance to look at it, we seem to have a nice amount of viewers who checked it out. Well, it was predicated. So what's happening right now, just so you know, is nothing new. I'll be straightforward. I'm actually pretty happy because I have SPY puts. I have Gilead Sciences. I have the companies like mRNA, which are going to pop real nice at the open. No question about it. And more importantly, the positional aspect on the Apples and Netflix and the Teslas and the Amazons and the Googles and the Nvidias and those type of high moving tech stocks, we reduced those positions, if not eliminated, and took significant profits of those within the past 48 hours between Wednesday and Thursday. So positioning is very critical. Now, if somebody's completely loaded up on all those stocks, and if you look at my, if you guys are going to follow my service, you certainly should look at my alerts and everything on Thursday and Friday. You're going to clearly see that I stayed away from that particular sector because there was a technical breakdown going on, primarily because of the coronavirus, which you're looking at here. Okay, so that's really what the story is. So what's happening right now is really nothing new. Everyone's going to freak. They're going to say it's the start of the bear market and all that garbage that we have heard every single time. Long term, we're going to cover a couple of my own personal thoughts. Look, there's no reason to get super bullish. You can be bullish on certain sectors. You can be bullish on stocks like Gilead Sciences, which have lagged the market in a significant way and which have substantial room to move upside. You can be bullish on stocks like Clovis, which has delivered huge profits for us, okay, which have nothing to do with coronavirus. You can be bullish on what do you call things like L brands, which are moving up nicely because it's a restructuring play. You can be bullish on things like a massive reversal play, like Jack in the Box, which have nothing to do with coronavirus. You can be bullish on things like Zillow, which has delivered humongous profits for us, ZG. And I still have a nice position going into March, and I intend to buy more because our housing numbers have been going strong, and Zillow has changed their business model to a degree where Wall Street is now in state of shock and buying the crap out of it. You can be bullish on John Deere because China's agricultural sector has really been hurt badly because of coronavirus, and they need John Deere agricultural products and their machinery. Okay, you can be bullish on Dropbox, a stock that no one ever talked about. We played it at earnings, big mover, still moving higher because they seem to have turned the corner. All right. You can be bullish on Square, even though the stock was down, because Square has nothing to do with coronavirus. Financial payment system, even though it's part of the technology sector. You can be bullish on companies like Intrexion, INXN, that is delivering some very nice profits, and I'm expecting some bigger profits on that, which is a data, big data play. What do you call what's the word I'm looking for? Like Amazon Web Services, like a major data industrial data storage company. So the key is, one of the things that I want to mention to people is that when it comes to, and a lot of you traders are new, and you guys overall are catching the drift, is the fact that you don't need to always, and I put that very directly down on the Twitter feed on Friday, I believe, on Thursday. Like, you got to start looking at other stuff. This is a market, like I said, I repeat, and please put that through your head, all of you. This is a market of stocks, not a stock market. Okay, the stock market is a market of stocks. So if you're selective, you're not going to hit every single one of them, because the downdraft in the market, as we can clearly see here, and the markets don't scare me. They don't scare me. Okay, it scares a lot of people. I know that. That's great, because it gives us great opportunities. What the markets don't scare me, which you know what I'm going to say, is because I rely on my charts. I know what my downside can be, even though they might not. I've been short a bunch of times on quick trades, and it hasn't panned out, or it went up a little bit and boom, then the market's turned higher. But the key is that there is never an all or none situation in the stock market. I've been doing this for a long time, guys. All right. And if I was a hedge fund, I'd probably be in the top percentile, like literally top 1 percentile. But and because everybody likes to get, this is where the emotional aspect comes in. Emotionally, some people getting a little too excited about the stock market. I got DM texting, I'm loaded up in Amazon. This is on Thursday and Friday. I'm like, oh Lord, I didn't even bother answering. Okay, and he's a trader who's made a lot of money off my service and his own trades. So like, I'm loaded up on Amazon and Facebook and Netflix and Tesla. Why? Yeah, he could be right. We could have a monstrous rally in the next 48 hours because the numbers coming out of China, and believe me, these things can happen, can show that the coronavirus effect is slowing. Now the fear is a pandemic. They have issues. They have coronavirus cases, and I don't know if they're exact dates, in northern Italy. Venice has canceled the carnival. I don't know if you guys ever been to the one that they have every year. It's like amazing. And then and of course Korea and Japan, that are right next door to China. Of course you're going to have issues there. So now there's a fear of a global pandemic, i.e., it's spreading like wildfire. In my opinion, it's not. But what the heck do I know? I'm not a virus specialist. But the fact is that now it's just like that. If you look at the definition of a pandemic, it's like the spread of this massive thing, as if this is like from the 1700s, the Black Death, or some sort of like massive thing that everybody in the world is going to die, because that's what that's really what's been talked about. So I'm not going to sit here and try to talk about human psychology and all that stuff, but that's really what's going on. But is it a serious issue? It's an absolutely serious issue. Is it affecting major Chinese production, and the fact that they were closed down for a month, they are just returning to work today, their time? Yes. The fear is that if they come, as the Chinese factories reopen, and China is basically letting the workers come in and basically telling them, you got to, start, you can't just start a huge, second largest economy in the world engine to shut down, that there is a fear that the virus might spread. They might, it might not. And so the fact is, it's how you look at life, all right? Because that's really what the market is. If you want to like scare yourself to death and try to keep on short in the market, I can assure you, you're going to get absolutely decimated. You want to short the markets through these tactical charts, you're going to do well. No question about it. Saying all that, the whole futures down 41, Dow futures down a gazillion points. How much is Dow futures down? Dow futures are down. Somebody can pipe in. Dow futures are down 358. S&P futures are down roughly 41, 354. NASDAQ futures taking the big brunt, down 1.65%, or 156 points. VIX is up 7.5% right now to 1833. That being that being obviously the inverse correlation, the fear index, the volatility index. So the key is that that's what's going on, and this is all has to do with the fact that there is a major fear of a global pandemic, which means global growth is going to really, you can't run away from it. Global growth is going to, I shouldn't say come to a screeching halt, but the numbers are going to be, much lower. And what do you think the global central governments are going to do? There's going to be a coordinated effort. They've already started doing that. China's already started to do that, of massive intervention, massive injection of money into the economy. And that's the standard procedure. And that is going to stabilize things. Now, when is the stabilization coming? Well, I particularly don't care, because we make profits almost every day on a whole bunch of selective stocks. So I'm not going to sit here and give you a macroeconomic lesson of how massive global central bank intervention can boost economies and markets can rip higher. China's head of PBOC, their central bank, he said, of course, he wants to, what's he going to say? Oh my God, my cousin has virus. I'm not kidding around, but seriously, he said that China could have a V-shaped recovery after this thing dies down. And remember, the coronavirus thing doesn't have to die down. It's just the rate of acceleration has to, in the number of cases detected and hopefully the number of deaths, as long as that is slowing down, the markets are just going to run, and the markets have done that repeatedly. So again, we're going to take a look at long-term charts. We're going to take a look at the short-term charts. We're going to look at certain stocks, and that's it. And we're going to basically wrap up. So am I clear on that? Everyone with me so far?
Absolutely.
Okay, that's it. So saying all that, definitely wash your hands before you go to bed, and don't go around eating garbage. I mean, that's basically it. And if you get a cold or a flu, don't take it take it seriously. Go get yourself checked out, because this is the flu kills a lot of people. People don't realize that. That's a virus too, right? So the bottom line is that just be careful out there. Aside from that, let's get into the stock market. So here's a chart on the, and a lot of the times, on my Twitter feed, and I say print and save, and I mean that. Print and save. Don't have to print on your printer. You can save that as a screenshot of your iPhone, of any of the devices that you're using. Because if you have these charts, like I have it, because I construct the chart, so they are etched in my brain, then you're not going to be as scared. And you shouldn't be that scared anyway, unless you're doing like crazy thing and just loading your whole portfolio with the Apples and the Facebook and the Netflixes when they're breaking down. And I'm basically not even mentioning those stocks over the last 48 to 72 hours. Go look at it. So that's it. In the meantime, for a lot of newer traders, these are extremely volatile markets. Right now, we have a serious negative catalyst in play. So trade less, or some days don't trade. Or if you want to set up some month out, 2 months out on a bunch of options calls on stocks which have nothing to do with the coronavirus, then that's fine. But don't sit around and every 5 minutes send a text to me saying, oh my God, what's going on? Because I'm just going to, my standard answer will be, go wash your hands. Yeah, that's what I'm going to say. Go wash your hands. All right. So that's basically it. This is a grown-up trading, consistent, technical trading, or any trading for that matter, is a grown-up business. So let's try to be grown-ups. All right. On that note, let us start. For a lot of newer traders, they'll be like, oh my God, and I don't blame them. This is what markets do. So this chart was constructed for you guys weeks and weeks ago. In fact, this starts off around the 24th of January, which was a month ago, long time. And you can pretty much see what is going on. Now here we have a here we have this zone here where the markets basically broke out of. And this is where we are pretty much right now. This was your, let me just get the pen. And feel free to ask any questions as I'm talking. I'd be happy to answer that.
Hey Frank, can I ask you? Sorry, Frank, can I ask you one quick question?
I just
what,
said,
what do you?
ask me a question.
Okay,
I'm just kidding, Paul.
yeah, sure.
Yeah.
What do you think the likelihood is of the Federal Reserve cutting if there's a big downturn, and what kind of effect do you think that might have?
Of course, the Federal Reserve at this point cutting rates is not going to do anything for us. Okay, the U.S. economy is flushed with cash. There is enough liquidity in the market in the U.S. economy to do that. However, your question is correct. The Federal Reserve will basically not raise rates for a long time to come because of what happened, which is fantastic for stocks. And that's the reason Warren Buffett over the weekend in his statement newsletter, Berkshire Hathaway earnings came out, they were very strong, said that over time, and I know he's always said that, he's always a stock market bull, and that he expects stocks to outperform bonds for a long, long time because rates are going to remain low, which is great. So at this point in time, because of the slowdown in the global economy and because of this unfortunate event of this coronavirus, do not expect any type of major rate hikes, despite a stronger U.S. economy, even though our numbers could also slow down a little bit because a lot of companies are getting affected by this, global companies. Yes, so now going forward, if you look at the Fed funds rate, which is the probability of whether or not the U.S. Federal Reserve Bank will raise rates over the next 3 months, I bet you that has come down. So if there is a full-scale breakdown on the U.S. markets and our economy, the Fed will cut rates. However, the Fed also has other tools, like they're doing right now with the repo purchase. They could increase that. In other words, the QE that's happening right now, quantitative easing, where the Federal Reserve Bank of America is injecting billions of dollars into the U.S. market almost every week, every day, with their repo purchases, they can increase that. So all that cushions the blow of any type of major slowdown. Absolutely, absolutely. But going out there and cutting rates, and again, what do I look like? I'm not a Federal Reserve governor. I understand what they do better than most people. It is probably not the best move. They need to keep some of the ammo in their hands to cut rates further if needed, if things get worse. But one thing for sure, any type of major rate hike, which would basically send shockwaves through the U.S. financial markets, the housing markets, is for now done. They're not doing it. So that's great. So that they're doing what they need to do. So that's the answer to your question. Did everyone understand what Paul asked?
I did. I have another question, Frank.
Yeah, go ahead.
So basically, this is Dominic, by the way.
I know.
Basically, the only problem in the market for right now is really this virus stuff, right?
Yeah, but that's not the only problem. I mean, look, like me and Paul were having a conversation a couple of days ago, and this affects U.S. companies. This affects U.S. corporations. You know, look at Apple. The stock fell like a monster, then ran up like a monster, and then fell again. We made money on the run up, right? Like Apple had to shut stores. I mean, what's the Starbucks, which is a major U.S. S&P 500 company with big profitability and stuff, huge presence in China? They had to shut down their stores. Look, 60% of the U.S. GDP comes when it comes to exports and stuff. U.S. corporations derive their big money from selling globally. So if the global economy is starting to slow down because of the coronavirus, then it's going to affect their earnings, and earnings drive the market. So
Gotcha.
yeah, this is a coronavirus issue, the big time. There's no other issues, There's no other issues, but this is a serious issue. So so any other questions, like, throw it at me as I'm talking. So here we have a situation back from January 24th when we went through some heavy duty volatility moves, which created a complex W, which I walked you guys through, did extremely well with that. Then their breakout, then a pullback, and then zigzagging its way higher to making a new high. If the coronavirus thing was somewhat contained, we would be here right now. Right there, 3,400 plus, 3,420. We would be approaching close to 30,000 on the Dow. But then we had that big dumpage, that very sudden dumpage, because what's happening is that a significant amount of this is the big money, the global, a lot of the sovereign money, i.e. government money and stuff, they are selling their own currencies and buying up the US dollar. The US dollar is moving up really fast. Now, when the US dollar gets very strong, is it good or bad for US corporations? Think and answer, and then I'll answer the question for you.
It's not great. It's not good.
Yeah, why is it not great? It's a simple, it's actually a simple reason.
It costs more. It costs more to the overseas.
Exactly. It's simple economics. US data and the US dollar also for a Chinese farmer to buy the soybeans is going to cost him a lot more because he's going to have to pay in US dollars, and the US dollar is going sky high because big money is all hiding in the US dollar and US government bonds, and US government bonds are at historical lows at 1.47%, the 10-year bond, which is great for US consumers. Go out there and try to get a mortgage right now. I bet you they're going to give you a better rate than what it was a month ago. And other consumer rates like credit card rates and stuff, everything is tied in with the 10-year government bond. So it's a plus for the US consumer. But the US government bond, 10-year bond down at 1.47% creates a technical shockwave, because there are certain correlations and arbitrage that happens in the credit markets. So when it fell below 1.5%, all of a sudden the market went boom. Remember, it just dropped like 320%. There was like, I'm just looking around like, what happened? Then I realized, wow, look at that. Because there is these big multi-billion-dollar funds. They're correlated with their credit structures and their equity positions and stuff. So they had to, when the bond deals go, that hard down, they had a big disruption, and boom, there was a big sell program that went through, probably couple, I don't know, I'm guesstimating probably like 10, 20, 30 billion, and everything just dropped. So yes, bond deals at 1.47%, can they go lower? Sure they can. It also does something called the inverted yield curve, which I do not want to get into right now. Okay, so you guys can read up on it. And I have videos on, I have actually done webinars on the inverted yield curve. If you go through my actual video webinar, you'll see one of them says, explaining the inverted yield curve. So when the yield curves get that inverted, what's the first thing that comes into what technically, what is the word that you keep on hearing?
Recession.
Exactly. Like the U.S. economy is going to go to recession. I said that at this time. I'll say it again. The U.S. economy is not going to go into recession unless our companies and the global economy comes to a screeching halt. In which case, we're going to go into a mini depression, which would be fantastic. I'll short the crap out of the market and buy everything back 2 months from now, right at the bottom. I'm telling you right now. All right. So the key is that I said it before. I'll say it again. This is a technical reason why this inverted yield curve and U.S. government 10-year yields are sitting here at 1.47% at levels not seen in years, because big foreign capital is coming and sitting in U.S. government bonds because they are still the best, safest haven. They're known as safe havens. It's like going into the panic room, or going into the bomb shelter when the bombs are dropping on top of you. Okay, not that you guys ever had to go through that. Neither did I. So, but the point is, like, you're there in the bomb shelter, or like during a tornado, they go into the basement and like under the bathtub or whatever, right? When they're in tornado. Yeah. So this is what's 1 second. So this is what's happening right now. That's the reason why government bond deals are down, and it also is bringing up fears of a recession and causing a pullback in the market. Go ahead.
Are you bullish on gold in that same type of light?
I used to trade the gold, certain gold stocks and certain gold indices. Gold supposedly breaking out. I haven't seen a chart on gold in a while. I would say, yeah, it is bullish on gold, but I believe that it might be a little too late, because the gold bucks right now are having one of their best years ever. Correct?
Yeah, it's breaking out. Yeah.
It's breaking out. It broke out a while ago. So the question is that now that everybody's starting to get excited about gold, I look at it very simply. Maybe it's a little too late. So I can't really comment on gold, because I really I can pull up the GC gold futures, which are up $14.50 right now. We'll take a look at it today. I'll give you a technical explanation of that. But is it bullish for gold? Yeah, it is, because gold is a safe haven, and everyone thinks like the world's going to hell in a handbasket, and this is going to be the pandemic. We are all going to die. So bottom line is, yeah, gold's moving on that. So let's move on to this here. For stock guys, this is what I'm looking at. If these are very clear indicators. My 50 fib lies at 32.74. We might hit that tomorrow. Okay, another 20 points. This was the big breakout level. The W formation, there, right there. That W formation is exactly where we are right now. There's a small volatility cluster as shorts are covering on some big drop. The futures, I believe, at one point were down 48 points or something like that. So right there, they're covering. This was another volatility cluster. I warn people, this is not, it doesn't look like an immediate short-term major support where the markets are going to go higher. I believe that the markets want to test at least the 50 fib. That's another 25 points from here. So what's 25 times 8? 8 right, that's 60. Yeah. So you're looking at 200 points, another 200 points on the Dow. Also remember, we have fallen quite a bit. Markets do not, I repeat, do not, doesn't matter what it is, do not fall in a straight line. They zigzag their way down. And when we look at the longer term charts, we will try to detect whether this is a full scale breakdown of a 10% type of correction, which should be actually be pretty damn good, because things got a little too frothy on certain sides. Everyone got a little too excited with certain stocks. So it's time to basically take out the fluff. So that's what markets do. So cleaning this out here, getting back my pen, I am looking at this was the rock bottom on the market right at the end of January on February. What date was that? Anyway, it was right there, beginning of February. So this is where we started. Can we fall down to 3,200? That's roughly another 80 to 90 points. Another 80 to 90 points on the market, which is roughly 640 to 720 points on the Dow, in which case every single media outlet, doesn't matter what political stripe, is going to basically say this is it, is going to be, in my opinion, a massive short-term buying opportunity, because all the indicators at that point, and we're going to look at our ultimate almost 100% proof indicator today, which I didn't get a chance to look at. It was a very busy weekend for me. I normally look at it on Friday night or Saturday morning, which is the New York Stock Exchange McClennan Oscillator, my proprietary model, not the ones that's out there. And if that is showing anywhere in the -40, -50, -70 level, you know what to do. Buy the crap out. I don't care if it's on SPY calls or QQQ calls, SPY calls. I go with SPY calls because that's more broad-based. For the day, or maybe for 2 days. And you know how much it pays. I know Paul does, and I know many of you do. Okay, is it at DEFCON 5? I don't know yet. We'll take a look at it. We'll reveal that. So that's pretty much it. Okay, I'm looking at 3,200 on the E-minis on the downside on a massive breakdown before we get a reasonable, very powerful bounce. We have the 50 fib here at 32.74, which we might hit tomorrow as panic sets in. Remember, mom and pop actually, and Paul, you had some great charts there on stock tweets. I noticed you put it up there. Like the mom and pop euphoria level has started to go up quite a bit, right?
Yep.
Exactly. And everybody wants to trade Virgin Galactic. Didn't even know who Richard Branson was till that stock came about. So bottom line is that there's a lot of short-term heavy-duty speculation going on. They don't want to make money on some of the ones that we make money on. They just want to chase the hot stocks. Well, the hot stocks just burnt mom and pop again, and some of the millennials too. So the bottom line is, the bottom line is that there was short-term euphoria, which simply means people got a little too excited about the stock market, which is fine. Excitement about the stock market is great. President Donald Trump, when he launched that idea that he would give a tax credit for people buying stocks, I mean, that is a phenomenal idea. I mean, really phenomenal. So that's fine, but you can't lose your head. That's all. So saying all that, this is what I'm looking at. Nothing more about this chart. Any questions? None? All right, let's move on. Let me get my, still good. Okay, so this is your 1 hour chart. This is more like, swing trades to get an idea where we stand, where we can bounce from. Now, these zigzags, as you can see, especially for newer members like Aldi, who's kind of new to the market. These are 1 hour movements in the market, so they're very sharp. They're very sharp. So don't expect. I just want to warn everybody who's going to listen to this. Don't expect the market to be, and not the market has been, but I'd like to remind it over again and again. This ain't grandpa's market. Like Heisenberg said on a DM, on a Twitter DM direct message to me, that, what did you say? I was laughing my butt out. He's like, he's on Adderall, a crack, like trying to keep up with the trades that we're doing. But more importantly, I know you've been doing well, but more importantly, the speed of the market, correct?
Absolutely.
Exactly. So
I'm drinking espresso as we watch this right now.
there you go. And the Mr. Heisenberg is in the business of he's a financial professional. So, oops, what was that? What was that? A B-52 bomber? Okay, 1 second. So anyway, so this is very fast moving market. Because not that humans are fast moving, it's because the machines are dominating like full scale. So when volatility really picks up, that means that the machines are controlling almost 80 to 90% of the movement in the market, and they are fast. And when I can't even keep up with it, and I'm pretty fast, okay, but neither am I doing 2-minute trades, so I don't care. So just be ready for it. This is the face of volatility. Now, the next chart is a shorter. This is the same chart, looked on in a slightly different way. Nothing new to report here, so we'll stick to this. Now we're going to look at a. Let me just clean out this. Aldi, are you keeping up a little bit?
Yes, I'm here.
Okay, I know you're there, but you're understanding some of the things. I mean, feel free to stop me. There's a lot of. I'm going to cover some little bit of the medium to complex stuff. Try to make it simple, but just get used to listening to it. Okay. So, and then you can ask some basic questions later on.
Got
Yeah. So let's take a look at the daily chart. I'm going to look at this, and I'm going to look at the Thinkorswim version. This is the daily chart that I had put out there. All right. What we are doing right now on the daily chart is this. And this is what excites me. We're getting oversold really fast. And I want oversold, like I've always my term, fast and furious. The faster you go up, the faster you fall, the better off for us traders who want to make money fast. Because look, all of us want to make money fast. I want to make money every 2 minutes. All right? Who wants to wait around for a month? I ain't Warren Buffett waiting around for 20 years. I don't even know if I'm going to live for the next, I shouldn't know, 20 days. I'm just kidding. Shouldn't say that. But the bottom line is that, so in order for us to make money fast, we want these resets to happen faster. So on the daily, this is what's happening right now. This is the live daily S&P E-mini futures. It is heading directly to this big fat red line, which is the 50-day moving average. From the looks of it, it's going to basically slip below the 50-day moving average, with futures down 44. Europe opens out at 3 a.m. Our markets open up at 8 a.m. for pre-market or earlier. And mom and pop's going to start calling their brokers tomorrow. Forget brokers, they're mutual fund companies where most of they say, that's it, please sell me out of that fund and put me in the money market right now. And the mutual funds have to comply. So they have to basically put money, they have to sell stocks and put it on the side so that for just in case for moving for what we call redemptions from equity funds. So when they sell a growth fund, let's say a tech growth fund or something, because Mr. Joe Schmo from here to Timbuktu it panics, which they are going to panic tomorrow. Okay, so look for great opportunities. So they're going to call up, and there's going to be forced selling in the market. And the markets have huge amounts of ETF, exchange-traded funds, that can be traded during the day. They're going to be forced selling. So is it possible that we make a clean slice through the 50-day moving average, this one, which has held as support for a long time? Well, actually, it broke below that here. Back, if you guys remember, back in the beginning of 2019, we sliced through the 50-day moving average like no one's business. And then this is the daily chart. So Aldi, I want you to understand this because you guys, other guys do. Each one of these candles is how many days? This is, I'm going to give you a hint. This is a daily chart. Each one of these candles is,
It'll be 1 day.
that's right, sir. So when this market dropped almost 700 points from here to here, back on the first, on 10/1, October 2019, how many days did the sell-off last?
Um,
Come on, Aldi, there's
2,
2
3.
bars. How many, 2 bars?
Yeah,
You
2
just
days.
answered the question. 2 days, exactly. So it only lasted 2 days. And after 2 days, what happened? Bang, the market went up for 2 more days, came down, still created a higher low. That means it was still higher than what it was here, and then took off like a rocket, right? So, but my question is, if we go through this type of movement, are you guys going to be ready? I hope you guys are, because these are the big buying opportunities in the market. I'm just showing you one. This another one happened back in August. These are the ultimate buying opportunities where you make so much money that you don't give a flying you know what is happening with coronavirus and what, whether the world's coming down, because you got cash just falling on your head as long as you buy these type of levels. Now, this was 2 days, and this was in the thick of serious pullback. So right there, big drop. I'll play the reverse, and then if it hits the 50-day moving average, I sell right before that. At that time, this is starting to go. Now, for newer members like Aldi and many others who are going to be listening to this, and I hope they listen, because everybody wants to make money, but nobody wants to really do the hard work of learning. And I'm going to mention something to you guys that I saw today on Instagram on a site, and this is what it says. So listen to what I have to say. It says 99. This is a some Instagram called SP500. Very interesting. Futures Traders 26. 99.9% of so-called traders have no idea what they're looking at. That's why we try to teach and spend a lot of time explaining to people. They waste years on sim. I don't know what that meant. And making shit up. They're happy to pay 50 to 100 grand for a college degree. But when it comes to trading, they expect shit for free. Enjoy wasting 2020. I'm just like, yeah. And then the guy goes, traders want data for free. So they keep requesting for free trials. I'm laughing my ass out. They go, they want the platform for free. They want education for free. They want charts for free. And yet they want to make 100 grand a year. Well, it doesn't work like that, right? I was laughing. This is pretty serious futures trader, this whoever this guy is on Instagram. So bottom line is, you guys better be ready. All right. And because this is pretty much what I think will most probably happen. And now whether or not the market goes off on another moonshot like that, I have no idea. But let's take a look at what might happen, because that's the purpose of this session. Let's project it out. Keep in mind, this is not the first time that something like this is happening. I just showed you the last time it happened. More importantly, it happened right here on January 24th, January 27th, huge drop on January 31st. And let me clear this thing here. So I'm going to just draw, I'm just going to draw out what I believe will happen this week. Just going to set up my arrows. Always remember, we're just small players in the market. The big funds are the ones who are mostly, right, believe it or not, wrong on determining on the market. So let's try to take advantage of their wrongness and their errors of what they do, and try to make some serious money. Okay, let me get my pen and let's start. So this happened back in January. Huge volatility. Again, a W formation. A W formation. In order for a W formation or a dragon bullish to happen, what do the markets have to do? For a W,
Go up.
for a W, no.
Double bottom.
Exactly. The markets have to fall first. The result of buying these levels is the dollars that are made on these big moves when it takes off. But in order for a W to form, you have to first drop, rise, a failed breakout, another double bottom, which is no, it doesn't have to be exactly there. Maybe it slips a little bit. It could be a slanted W. It could be a upward slanting W, or it could be a complex W, which has like a little bit, but it still looks like one. That's my job to figure out, okay? But in order to do that, it has to first fall. Beautiful, it's fallen, all right? It's falling, great. So now we're creating the first arm of the W dragon bullish pattern. So you can make these things up. So first move is going to be this red line here, known as the 50-day moving average, which you know, and Aldi will learn fast. Aldi, did you sign up for the ACS session? Did I see you do that? Because I got a whole bunch of signups this weekend. Aldi.
Yes, I'm sorry. Yes, I did.
Okay, yeah, you're on the list. Great, because I'm going to kick off this week. You're going to be a very fast learner. So bottom line is, I'm sure of that. A few times that I've spoken to you, sir. So bottom line is that the first move is of this 50-day moving average. They'll try to hold it. They'll try to hold it. Now, whether they can hold it and bounce off that will be determined by the slope of this thing known as the stochastic. Very simple stuff. Okay, if the stochastic is starting to bottom and we start to see a turn like this, then you can rest assured that any breakout will be a breakdown will be a false breakdown below the 50-day moving average. Because if this is starting to turn, and this has happened 100% of the time, not 90%, not 95%, not 60%, 100% of the time, okay? And you're going to see a substantial bounce. That substantial bounce will take us back to this orange line, which is the 34-day moving average. I'm not saying it's going to take us to the highs. I'm simply saying that this bounce that we get, whether we get it from here, I'm showing you the first scenario, or whether we get it from here, which is the second scenario, we don't know yet. Whichever the case, I'm going to be watching these two lines here, which are the stochastics, to determine what is happening on a swing basis. And I'll be looking at this. This is the daily. We also look at the 1 hour and the 4-hour charts. But let me do the hard work. You guys, when I put out the charts out there with those quick 1 or 2 line explanations, please, somebody please mute their mic. I'm getting a headache, please. So what do you call, because my tripod is moving. Please, thank you, because I'm like, my mind's moving at rocket speed right now, trying to cover a whole bunch of stuff for you guys, so I can't hear this background noise coming through. Sorry. So bottom line is that that this is the first line of defense. The first line of defense is right here, the 50-day moving average. It never just goes there and says, okay, we hit the 50-day moving average, let's bounce. No, it always slips, because that's when the panic really sets in, just the way it's setting in right now. Futures down 47. So we slip below. We slip below. We buy more puts. We jam them hard. We don't want to sleep with them overnight. With the take it shouldn't sound like that. With the SPY puts that much. If you got a big position and you're up a lot, don't be like greedy and say, oh, I'm going to keep them. Tomorrow's going to be down too. The markets will basically, they'll look at the clusters of where those big positions are on the E-minis, and they're going to blast it for no reason. The futures will open up like 30 points. You're like, oh man. Take out most of them, keep some, as long as this directional bias is lower. Once we start to get down towards here and start to see some basing, that's when you want to take some calls, some nice calls. And I have with some cheap calls too. Those are like those who are close at 60 cents, the Feb 28 ones. Those are going to be like at 20 cents tomorrow. And the ones which are 60, 70, 80 cents a dollar, they're going to be, if the markets open up here, I'm selling them up 300% tomorrow morning. And I hope some of you guys kept some. I don't care if it's 1, if it's 2, if it's 20. So bottom line is that if the breakdown continues, and I'll know by looking at the shape of the candles and this still going down, then you want to short the market lower towards the 32.20 level or 32.34 level. The Bollinger bands say a lot. And this is the simplest version of the Bollinger band of investing.com. All right. So this Bollinger is basically the lows of January 24th. There. Will this W be formed? First situation is a little slippage and a bounce. Let's say a bounce and a failure. And then you get that real fast drop. And this should create a pretty powerful W. I can assure you, if this is starting to happen and this W pattern works out over the next week or so, then we are going to, it will simultaneously be, the timing will be with some good news about Corona. Charts move. Most of the times the signals will come before the news is coming. All right, so this is the most optimal scenario, and I'm going to be like long short like no one's business, because at this point this is a technical breakdown. So I'm going to be looking, I'm not going to be bunching into like heavy duty long SPY calls, SPY calls or DIA calls yet, till I start to see the whites of the eyes and everybody's so frigging scared that I'm going to say, that's it, I'm going in hard. And it's coming, guys. It's coming. We get that 700-point drop that I explained to you guys earlier. You see how scared the world is. And mom and pop already, they're crapping in their pants right now. They can't wait to call their mutual fund companies, Fidelity, Oppenheimer, all the other Vanguard, and say, this is it, sell me out, sell me out. That's going to happen tomorrow morning. Okay, same pattern. Okay, so this is one scenario. Go ahead while I switch charts. Go ahead, sir.
I was just going to say those mutual funds, they have a settlement time frame, don't they? So they won't actually hit the market till later.
No, they don't. They don't necessarily have a settlement time per se. What happens is mutual funds cannot sell during the day. ETFs can, right? Exchange traded funds can be traded during the day. So let's say, for example, you own a Vanguard and you understand this part, and you call them up and say, listen, I want to sell my growth fund, this and that. Your settlement price is going to be the price at 4 p.m. So bottom line is, whatever the NAV or net asset value is at 4 p.m. is the price you get, not the market price at the time that you call in. So if the market is down 300 points from the morning that you call in, like let's say you call in at 10 a.m. and say, hey, listen, sell my 500 shares worth like maybe $20,000 and put it into my money market account for now, the actual price you're going to get is the NAV of the closing, which is 4 p.m. that day.
Yeah, and I think it could create a snowball effect, because then it pushes the next day market down a bit, right?
Yeah, exactly. But believe me, there are so many players. In the old days, it was just the big mutual funds that controlled the market in the days of Peter Lynch. Okay, and but now there are many other players. There are big hedge funds, arbitrage funds. They're not all thinking alike. Some are opportunistic like us. So they have money, they'll slam in. That's the reason, right when you think the market's done, the next morning the futures open up 40 points. So it is not just the mutual funds. Even though they're the 800-pound gorilla in the market, they are not the only ones who control the market anymore. I hope all of you guys understand what I just said.
Yes.
So so this is a very good question on the part of Paul. So the perfect scenario is we attempt to bounce here, we fail, and you can easily trade the SPY puts during the day. Beautiful. And they'll move fast, by the way. 30, 40, 50, 60%. And I'm going to be showing some very clean charts. If the candles are still going lower, don't go nuts, because the markets can turn any minute. One headline, even if it's a manufactured headline saying there were 5 less deaths, coronavirus, the markets are going to just go boom, higher, because there's a lot. It's like a coiled spring. We'll see. Bottom line is, this would be the most perfect scenario, buying the market at around 32.20 on the E-minis for a good solid bounce, which you need to sell. And once this bottoms, this is not bottomed yet, so there's more room to go. As Paul mentioned, there is a momentum effect when from massive mutual fund selling, which I know mom and pop are calling tomorrow, like completely like, oh my God, this is it. Right when they got into the market in the last 2 months, there really stocks. Oh my God. Okay, now let's take a look at the same picture on Think or Swim. Do I have it here? One second, let me clean it out. We are getting sold fast. Nothing is more exciting. I'm just telling you straight out, and I do not want to be overcomplicated. Nothing is more exciting than a full-scale breakdown. As long as you're not heavily into the wrong things. That's what size and positioning are very, very important. No one can be perfect about it, but it can be done. So let's see here. Let's take all these out. Let's clean this out here. Here was your big rising wedge. A rising wedge pretty much always corrects, whether from the top or from close to the top. Where are we right now? We are at a gap fill. This is more clear. People who use Thinkorswim, best charting visuals you can see. Make it very clear. So you got this rising wedge, we broke. Nothing. This is short-term moves, believe me, not in the longer scheme of things. And here's your bottom end of the gap. Everyone see this gap, Dominic?
I see it.
Okay. This was your big breakout that I showed you on the other chart. Let's make this thicker. This was that W formation breakout. This is right where we are. This was where the market had pulled back after it broke out of there. Small bull flag. That's exactly where we bottomed this evening. We could probably fall below that. I think it will when the European markets open around 3 a.m. this morning. This is your lower gap, 3270. This is the points that which you start licking your chops and saying, this is it. I'm really going to put some nice money. Why do traders, a lot of traders, regardless of how much money they have, never really, sometimes, I shouldn't say never, but a lot of the times don't make real money on big trades that they're doing in huge percentage return? Can somebody answer me why they're not like, yes, I did it, even though they're in that trade? It's called trading psychology, behavioral finance. Why? Why?
Because they wait too long and they weren't prepared for where the market's going to go.
No, not at all. Listen to my question, guys. This is very important to all of you. You're in a trade. You got into a trade. Let's pick one. Nvidia, when I told you guys to buy it before earnings or even after earnings, okay? You're in that trade. It's up 70%, 140%. Or even an Apple, like you bought it right when I told you to buy it, and then you're up like it, and it's running. You sell it, but it doesn't really make you that excited. But you were in that trade. Why?
They didn't
Greed.
position enough.
What was that?
Greed.
What kind of garbage answers? What do you mean greed?
They
Why do you think
didn't put
making
enough money.
Exactly. Guys, don't overthink. Think like Donald. He thinks simple, complicated stuff, and he just lays it down, and that's the reason the country voted him as president. He takes a very complex thing and just makes it simple. It's simple because you didn't have enough. You bought one instead of buying 4 calls. Exactly. That is the biggest bane, B-A-N-E, look it up, what that means, okay? The biggest human error. On a massive breakout on the stock, you're nibbling at it. Yeah, percentage-wise, it's up 150%. How many of those have I given? But you didn't have enough. So you never made that 5 figures or 4 figures within a day, within 2 days. So yeah, you're kind of happy, but you're not happy because you didn't have enough. Does this not affect everybody? Does this not affect everybody to a certain degree? Exactly, exactly. So once you get over that and really understand that at certain points you bought buy size, and believe me, I've gone through it, and I still go through it at times. You see, the stuff that you hear from my voice is not something I'm just making up to get you guys all excited or get you guys motivated. It happens to me too. But I get angry at myself. I mean, if you don't get angry at yourself, that's your problem. That means you'll never make real money. You got to get really pissed at yourself at times. More money is more money is left on the table by not having a sizable position or in that position on the long side than on the short side. Trust me. I have every single spreadsheet on that. So what I'm getting at is, thanks for the answer, Z. It's like everybody overthinks too much. I mean, come on, guys. It's not rocket science. What I'm getting at is, once we get towards these levels here, you want to put in a sizable trade. That sizable trade would deliver some serious money for you over a very short period of time, maybe 6 hours, maybe a day, maybe 2 days max. So get ready. Get really ready. Now, let's move on. Let's look at whether or not or what will happen. That's when we look at the internals. The volumes are high, capitulation volumes are like that. When you see big red bars like that, that means panic capitulation. I like that. When was the time the market bottom? I want Aldi to see that and answer. You don't need to think. I just want you to see. And what you're going to answer me is what so many other new members will hear, and they'll understand it. Because, one second, I haven't asked the question yet. So let me get the pen. Aldi, you with me?
Yes, I'm here.
Okay, focus now. When the markets hit this back on sometime in like weeks ago, forget that date. It was some in February or something. First, somewhere around there. You see this, right? This was the bottom, right? Short-term bottom on the market, right? And I'm saying that if the market really breaks down for now, over the next couple of days, this is where we can go. So you understand that part, sir, right?
Yes, sir.
Okay, what do you see here? A huge red bar, right?
Yes.
That is known as a capitulation bar. That means that everybody, I mean, that's not everybody, but that's when the panic hit the roof. You got it?
Yes.
That's when the panic hit the roof. That red bar is known as a capitulation volume bar. That means that everybody who wanted to sell, like, I mean, they're screaming like, that's it, I'm out of the market. Is the most beautiful things you want to hear in your year, because that's when you get the prices the cheapest. It's like at the bottom of the housing market when everybody was just panicking, foreclosures hitting the top, you could buy houses really cheap, right? So it's the same thing with stocks. Stocks go on sale. This is known as capitulation, where fear hits the highest. You with me? And so that's why the volume, you understand the volume, the number of shares traded, right?
Yeah.
In this particular case, the number of contracts hit the highest. Look at that. See that? Now, when did you see this type of volume bar again? Use your eyes.
Yeah. Thursday.
Thank you. Thursday. We had the same type of capitulation on Thursday. And tomorrow morning, this is happening right now at night, okay? Tomorrow morning, we might see another bar like that. When you get these type of capitulation bars, which are in roughly about the 500,000 plus contracts on the E-minis, you don't have to understand that part. It's just a number of E-mini contracts that are trading. Then you know the market is starting to create a bottom. Are you with me? Are you all with me so far?
Yes.
Yeah.
Exactly. I don't care what you think or I think, what I'm a corona specialist and you're a corona specialist virus and you know everything about what's happening in China and you have contacts in China and they're telling you what's going to happen. Means nothing to me. What means are these charts. And now that you are part of Clueless Trading as a member, you're going to see this happen in front of your eyes. What I'm telling you is going to happen. So what I'm basically saying is once we get those type of capitulation volumes, we get a short-term bottom in the market. That capitulation volume, futures are down right now about 50. So this is what's happening. Like panic is setting in more. We want more panic to set in. Bottom line is if we hit these levels here, and I'm going to be showing this chart, exact chart, this 1 hour E-mini charts during the day tomorrow and the day after, and it gets to that point, you got to start buying in. It's called scaling in. You buy a little bit, you buy one call, it slips down a little bit. Big deal. Let's say in your head you want to buy 4 calls. So you buy the first one, it slips a little bit. As long as it's slipping and sliding, and I'm saying I'm adding, it's entry 1, entry 2, you can do whatever you want. That's how I do it. I cost average the price, and then I just wait, and then boom, when it goes like that, is this the first time I'm doing this? I've shown it to you guys so many times, and most of the times you guys don't have any positions even. Forget about position sizing. So this time, don't make the stupid mistake again, because we're reaching that level. You hear it all over. Even the bulls are capitulating right now. They're like, oh my God, this is it, boy. This is the big one. There is never a big one. When the big one comes, we're gone. It's called Armageddon, all right? And you know how Armageddon's going to happen? A big meteor is going to hit Earth, and boom, gone. No more trading. I'm that serious. It's in the Bible and every other holy scripture, right? It will. A big meteor will hit. It's going to come. My charts won't tell you when. Just kidding. So bottom line is that wake up, guys, all right? Now, let's take a look at the internals. I don't want to linger on this too much. Aldi, thank you for your answer, because that is very important people to realize that when they start to see these big volume bars like this, that's when, excuse my, it's like the shit hitting the roof or whatever. And everybody's like, even the bulls are like, oh my God, it's over. I'm serious. And Dominic has seen these. And I start to say, yes, let's do it, baby. Because that's when you want to buy some size. Are we there yet? No. Are we close? Yeah, maybe a day or two. Give me more. Futures are down 53 right now. See a full-scale collapse going on right there. So mom and pop, who is right now before going to bed, somebody who's, looking at the futures, saying, honey, she's calling, why aren't you coming to bed now? I'm just in the kitchen. I'm getting a glass of milk. I'm watching the futures. Oh my God. Gotta call Joe tomorrow. Edward Jones. Gotta get out of the market. What's going on? That's when you say, all right, baby, give it to me. All right, it's starting. So this is a 1-hour chart. It's creating a pretty substantial bottom. Every single time that the stochastics have hit these levels, which are in that 9, which you don't have to forget the number, at these levels, right down here, you get a pretty sizable bounce. Those bounces can last anywhere from a couple of hours to a day. So you want to make fast money? Instead of texting me like, oh my God, what's going to happen to the market? Listen to this webinar and get ready. And you can see this on your own side too. We're getting there. We're getting there. Now, what else is exciting to me? Can somebody, Z can explain that. Z, explain to people what's going on with the McClennan oscillator here.
I'll try to do it very simply. When it hits negative 400, you want to go in the market by
hard. I mean, not just negative 400. Thank you. Yeah, you're right. You want to go in hard you want to win fast money. That's where fast money is made. The first bounce you get 300-400 points, you always sell it. Don't sit there saying, it's going to go up another 700. Yeah, it will. But right there, it's going to hit some technical points. So you want to always take your first nice 100% type of profit. Mentally, it's very, it's like a B12 vitamin shot, right? It's very exciting. So you're ready. You take a little bit of the money. You go in for the next move, for the next kill. But the first move, you always sell. Unless you want to swing it, in which case your profits will disappear, then come back again. I like to take my profits on the first move and then re-enter. That's what I do. So bottom line is, this is last time we bounced really hard was a couple of days ago. Here, look, minus 273. Big bounce move. Two weeks ago, when everybody's like, oh my God, here we go again. Yep, here we go again means we're buying. Right there, minus 300. Minus 400 you get the first sizable bounce, then they sell it. It takes about a day or so. And then it creates another low, which is a higher low. This is, and I want to ask this because this is after all trying to teach you guys things. The markets hit a bottom here 3 weeks ago. Okay. And, oh no, here, this was lower than here. Correct? Everyone with me?
Yeah.
But the internals, which is your internals of your body, This was a higher high. What is that known as? When the prices hit a lower low, but the internals, what the McClennan oscillator in this case, and even the stochastics did, created a higher high. I mean, higher low.
It's a
I've mentioned this 100 zillion times. Come on, guys.
ascending.
No, not ascending. Dominic, you know the answer. Come on, guys.
I can't think right now. I'm spacing.
Okay. It's called a positive divergence. Guys, you've heard it from me like 900 zillion
That's
times,
it.
all right? Exactly. I know you knew the answer, you know, but yeah, it's called a positive. Now, what is a positive divergence? A positive divergence is when the market, and it happens with stocks, lot too, is the most beautiful buying opportunity. Positive divergence, when the prices are hitting a lower low, but the internals are creating a higher low, is known as a positive divergence. You buy. And guess what happens? You buy this positive divergence, bang. In 2 days' time, you feel you are the king. You're 50 cents or whatever it is. You're, what's that boxer? The one who always shows his dollars and it's gold.
Mayweather.
Mayweather. How could I forget that? Okay? Like Mayweather. You're like, yo, just got paid. So you're going to get very paid, okay? Just get ready for it. So this is what I'm looking at. I want these to be, these are pretty oversold right now. Now, if somebody says, well, I want to be very certain, well, in that case, you want to be that certain, don't be a freaking trader, because there is no like, oh, I want to be certain. Is this the real turn? How many times on TV you hear, oh, we're not out of the woods yet, right? You guys hear that a lot on TV?
Yeah.
Hey, Ray, how you doing? I see you in there. You're with us. Ray, can you hear us? Okay, maybe he doesn't hear it. Oh, maybe he's writing on the thing. Okay, let's move on. That's like the stupidest thing ever. What do you mean out of the woods? We're never out of the woods. We are in the woods all day long. It's called the stock market. Out of the woods. Like what? The wolf is not going to chase you, as you know, because you're Little Red Riding Hood, like running through the forest. I mean, come on. The wolf's going to bite your butt even if you're wearing armor plate. Okay? So you're never out of the woods. The next time you hear that, you tell the guy to just shut up. Out of the woods. There's never out of the woods or in the woods. We're in the woods. We're trying to make some money. So let's take a look at the daily. Now, the daily is daily shows that we probably going to, you know, they're going to sell the first bounce because the daily is not fully oversold yet. And when the daily, it's getting there. When the daily gets like this, oh Lord, you want to buy the crap out of it. The daily gets RSI gets to about 20. For Stochastics is simply the second derivative of the RSI, relative strength index. It gets down here. That means the market is going to go for a multi-week run. So looking at this chart, which is a little bit busy right now because I drew all those lines, I would say with a 50-day moving average is almost a given. We must get there. We will most probably get to the 50-day moving average tonight when the European markets open and the Europeans freak because Northern Italy has coronavirus there. So let the Italians freak. Let the Germans sell their market, and we get to our 50-day moving average. Okay, how about that? Deal, guys? You know, let the Europeans completely freak out, and we get to our 50-day moving average and possible slippage. If all hell breaks loose, we're going to come here, 3,200. That is a big drop. That's another 700 points. Do I think that's going to happen right away? I don't think so, but what the heck do I know? If we find coronavirus in Queens, New York, which has a large Chinese population, or Flushing, which is the Korean way of saying Flushing, okay, because it's like literally little Korea, okay, out there, you know, very lots of great businesses, lots of things. They say Flushing. Somebody's going to say, you stupid racist. Of course, I'm a New Yorker. I'm an equal opportunity racist. Come on, I love everybody. So yeah, if it hits Flushing and Queens and stuff, see you later, boys, okay? We're going to come down real fast right here, around this level. So this would be a full-scale pattern. We might get that by mid-March. And the other thing is, you know, there's Bernie Sanders, like, you know, he's like won the Nevada caucus and the healthcare is going to be all scared. So bottom line is that if we get there, that will be like the ultimate buying opportunity somewhere in this zone. Like you want to put some real money in there because then there's going to be a substantial bounce. This is the first buying opportunity we're looking at. Not yet. I would like the market to break below the 50-day moving average, this red line, which is futures down maybe 70. And you hear them screaming on CNBC and Fox and Bloomberg. So that's it. So we're getting there. We're not fully there yet, but very close. I'd say 48 hours. Okay. Let's look at a stock which you can make a lot of money on. And it's just starting right now. And that's Gilead Sciences. They are one of the foremost genetic companies. Stock has really done not much. For us, up 40, 50%. Beautiful. I mean, telling you guys to buy it from a buck, it's like $2 and change on the calls. But I'm talking about real money, 300-400%. So, Ray, can you hear us? Okay. Let's look at Gilead Sciences. This is one of the foremost makers of the vaccine of coronavirus. And they will do a service to humanity, a great American company, US company, if they can get that vaccine out quickly, which they said they are trying their best. This stock will go to $90. $90. Your calls will be up so much, your head's going to spin. But if you just have one call, you're not going to get anywhere. It's just like paying the PSE&G bill. You'll be like, oh, honey, I just made the money to pay the electric bill. But you got to be positioned right. That's why we're buying the March calls, the 70s, right? So let's take a look at the weekly. This is what excites me. So I'm going to do some broad strokes. And this is not a stock that I normally trade. I just took my second position, I think, in years, like in this stock just over the last couple of weeks. And again, I repeat, don't have to be fixated with the same Facebook, Apple, Netflix, Amazon, Google, Nvidia. These are great companies. But they already made huge run-ups from the time that I told you guys to buy it. And there are a few stocks, tech stocks left, which still haven't reached the top. So look at this. Here's your trading band. Don't make this complicated, guys, seriously. It's roughly around 73. The bottom end of the trading range is 60. How many points is that? 60 to 73. Aldi. 73.
10 points.
13 points, sir. 73. 60.
Oh, 70. Okay.
Yeah. You're right. 10 points, 13 points. The stock is approaching the upper end of the box, what we call a range. So upper end of the range is around 73. I'm just kind of, let's call it, 73. If it breaks out over a matter of weeks, the stock will add another 13 points to here. What is 73 plus 13? 86, right around here. That's a little too optimistic. Let's look at shorter term. The way I drew the chart, I have a big fat white line here because that was the time that they actually sold the stock pretty hard. That was back in October of 2018. October of 2018. That was in 2018, 2 years ago. All right. So that is a major level that the stock wants to get to. Just the fact that they're working on coronavirus, the fact that coronavirus has now entered parts of Europe in a big way, the stock should get at least, it'll be up, by the way, it's already up $2 after hours on Friday. Like $1.50, $2. The stock will most probably open up $3 tomorrow. That's my guess. That means it's going to hit the upper end of this box. I have the 70 calls. If you're an options trader, if you bought the March 2070 calls, you're going to make some nice money, probably about 150% or more. What are you going to do? Somebody who, you guys are traders, what would you do if the stock opens up at 72? You have the March 20 calls, which closed at $2.34, up 107% on Friday. Was the market up or down? 1 second. Was the market up or down on Friday?
Yeah.
Last
Down.
Friday was
Yeah, market was down a lot. And the Gilead Science options on Friday were up 108%. So if it hits that 72 level, what you do? Those options, let's say you bought it on Friday. I bought it earlier. So
sell them and then move up, roll your options to a higher price.
that's it. You roll over to a higher price. So which ones did you buy? If I buy the 72, I'd buy the 74s. You want to buy some really cheap ones? Go into March. I mean, we're buying March anyway. We have enough time left. So you can buy even the 80s, which are in the pennies, and buy a whole bunch of them. And if the stock goes towards 80 into March, you're going to be up $1 gazillion. But I like to buy $1 out of the money or two. But this is to me a range breakout in motion. All right, I want to 1 second here. Okay, what are the stocks you guys want to look at? I mean, of course, I have a lot of stocks, but then they're all on my Twitter feed, so I'm not going to waste my time going over each of them right now.
Hey, Frank, can we look at the McClennan oscillator real quick?
Oh yeah, thank you for reminding me. Let's get the drum roll. I haven't seen it. I haven't updated it. This was 20th of February. What day was the 20th? Friday?
Thursday.
Thank you. Yes. See, I'm an idiot. I don't even know dates. So, guys, this is exciting. Okay? I don't have cheerleaders here with, like, pom-poms and, like, maybe I'll put a couple of my dogs to dance. But seriously, this is exciting because this is Thursday. I haven't updated this chart yet. On Thursday, this is how the McClennan oscillator closed then, which didn't look that bad, right? Which didn't look that bad. Like moving up a little bit. This is the these are the points you want to buy the crap out of the market. This is like you buy blind and you come out rich and blind. Okay? So for minus 41, minus 63, minus 65, minus 52, you don't need to know about the stock market. You see the McClennan oscillator right there and the stochastics all the way at the bottom. You're just like, you're going to be a baller trader. I mean, that's it. You're going to buy it. When they're in the minus 22, minus 33, they're kind of mixed signals. Minus 26, that's like short-term sell-off. What gets down here, that's when you start, then you just like big time. Okay, move in. So
I think it's going to be 20.
It's going to be what?
Oh,
it's going to be minus 20. Yeah, you're probably right. Yeah, minus 20.
It's going to be mixed, and then tomorrow it's going to be higher.
You think so? Okay, let's see. But I'll go with you. I'm going to say minus 20. If the futures open down 50 points, we'll be like, remember, this is only updated. This is not updated during the day. This is updated at 5:30 in the evening. So if the markets close down tomorrow 400 points, we'll be down at minus 33. The next pivot. See the pivot right there? It says P. So here's the best part. I haven't adjusted this for Friday yet. So let's do that. Update. Nice. It's already at minus 21 as of Friday. Dominic, see? There.
Boom.
You called it. So you called it you called it actually a day early. Yeah. It's already right there at minus 21 with futures opening down right now. And mom and pop's like, oh my God. All right. I don't want to go into mom and pop stuff anymore. All right. We're gonna be, I want to see minus 50. But that's only if the market has no substantial bounce during the day. So if the market opens up minus 49 or 50 points, 50 handles lower, and Dow opening down 400 points, and it stays like that all through the day, then we are going to be down here. Then we are going to be down here. What happens to this pen? Okay, down here. We would like it to be down here to get the cheapest possible price. prices on things. Now, people ask me, what should I buy when things are like that? The simplest things to buy, of course, it's some of the fast moving stocks and stuff, but they might be, like I said, you know, the Apples and the Facebook and the Netflixes, they're going through a short-term liquidation, like I explained before. Some big funds are selling them, believing that their earnings are going to get hurt because of the shutdown in China. It wasn't a slowdown; it was a shutdown. China shut down for 3 weeks, a portion of the country. So the bottom line is that you can just buy the SPY. You can buy the DIA, which is the Dow Jones Industrial Average, diamonds. You can buy the QQQ, which is the techs. And I would stay away from the IWM, but you can buy that too, which is the Russell 2000. This is my favorite. Yes, it won't give me a 400% move, you know, on a small move in the market like some stocks do, right? Some stock options do. But hey, I'm happy with the 120%. I'm happy with 200%. So the SPYs are my first vehicle of choice. The next one is the diamonds, QQQ, and forget the IWM. You know, and there's so many other assets that you can buy in the market. So many other assets, you know. So yes. So bottom line is that this one was minus 21 or 20.91 on Friday's close. So tomorrow, if the markets stay down 300-400 points, there's going to be a lot of like panic in the market, right? And for reasons, technical reasons, fundamental money management reasons we explained before, mutual fund selling, ETF selling, mom and pop basically just completely saying, that's it, I want to take my money out and put in the money market for now. And they're all tuning into Fast Money and Kramer to see what's going on. And those guys have no frigging clue what's going on, you know, like when to buy the market, like technically speaking, we should be within the market, then it'll be down here. So you can start scaling in. Remember, once it gets to this level, we also need these two indicators to also come down. So if these two indicators are not down, and this is down at minus 40 or so, then that means the short-term bottom is not in place. Are you guys understand what I just said? All three indicators, these are not indicators. This is actual external price movement. Reading. So we need all three down here. The other thing I want to show you guys is my 533 chart. And you're going to learn a lot of this stuff in simple. I explained this in detail, but in a simple way, so you'll understand it in the advanced coaching sessions. All right?
Okay.
Yeah. Now you're just getting a flavor of this stuff. But like I said, those numbers get like that, and you need to buy the market. So don't buy the market right at the bar open tomorrow. I'm telling you that I wouldn't do, unless something substantially good news comes out. Then they'll rush the market up 200 points in like 20 minutes. So let me see here. Okay, so we are seeing a full-fledged move down on the SPX 533. This is the way I read this chart. We are still, it has the first negative reading. It's below the zero line. Generally, the best times to buy the market is when the MACDs are this low. 100% of the time, the markets have had substantial bounce. See, boom, boom. Okay, so if this is just a mild drop and then the markets are going to turn from the mid Bollinger, this dotted line is the mid Bollinger, then that's fine. Otherwise, we are getting oversold real fast. I'm going to be watching this carefully. This I update all through the day. This is fully updatable all through the day. So I'll let you guys know what I see there. I've said before, I look at literally, I should look at 32 different indicators. I look at about 24 of them now. I show only a few of them. And that's fine, because my job is to come up with the best messaging. Your job is to read the messaging, not to not to do the internal work. So the only other thing I want to show you is the weekly to see what's going on here. And honestly, the weekly is not showing, and this I was noticing all through the week last week, is not showing anything that tells me that our overall uptrend is finished. And I'll tell you why. And these things have been very right for me. That's the reason why I know. Look at the stochastics turn. The market went on a multi-week run. Even though it pulled back, it still kept on going. Same thing is happening here. We turned in late January, early February. Yes, we got overbought. Now we are coming and retesting the 50. We are most probably going to be down below 30 on the RSI by tomorrow. However, if these two lines don't go like this, the market and this doesn't, this is decelerating a bit. This is the strength of the MACD, momentum divergence indicator. If this is just still the same and it actually starts to rise, you can rest assured the bulls will take control and try to push the markets higher again. And the reason behind that is two reasons. One, a lessening of the coronavirus cases and deaths. And number two, the massive injections of billions and billions and overall trillions of dollars into the global economy to stabilize financial markets as well as the economies. Those were the two reasons for a push up. I'm not saying new highs. I'm simply saying short-term moves up. But none of these are at least showing me right now a full-fledged breakdown on the longer-term picture. So that's basically it, guys. Any other quick question? Any other stock you want to look at before I sign off? Get you guys some night. Okay, SDGR. Okay, I don't care if you bought 100 shares or 1,000 shares or one share. If you didn't buy one share, you should just slap yourself really hard. And really try it sometime. Might be a better trader. I've tried it on myself. I'm a better trader. Because I have gone and I told you guys to buy it off IPO day, then a couple of weeks later, again around 32, and the stock hit a new high on the day that the markets are down 700 points. Who the heck cares about coronavirus when you're dealing with the company Schrodinger, SDGR, and I showed you, I put this out. You think these guys are kidding? Citron might be the craziest short seller in the world, but this report is serious, and I told you guys to buy it the first day. Why did I tell you to buy SDGR for the first day? Can somebody tell me who didn't buy SDGRs? Tell me why I like that biotech company. And I did some homework on it, believe me.
There are a couple of reasons. One, it's supported by Bill Gates. It has a groundbreaking technology, and
That's it. Those are the only two things you need. It's not just Bill Gates. He did the who's who. Bill Gates is the biggest name. Why would Bill Gates put money? You think he's that stupid? Why would he put a substantial amount of money, not his wealth, but money, into pushing a company called Schrodinger that nobody and their mother knows about? And then these guys come out and write a report, which I put out there for you guys to read. And I know some people who make crap loads of money on Schrodinger, and they still are going to make more money. This stock is going to $100. While you guys sit around and try to be all federal bankers, like, are we going to inject a little bit more billions? Friggin' buy these stocks. And I can't wait for what? And they compare this to Tesla in the old days. I'm like, whoa, I believe everything? No, but it's great information. They are disruptive technology. You know what disruptive is? Clueless Ape Trading is a disruptive service. You know what that means? We don't sound like those other trading services. We don't think like those other trading services. We are disruptive. We look at the market in a very mathematical, geometric, and tactical fashion. That's why we are a disruptive trading service. We will say things that we don't need to agree with anybody. And we're going to be right most of the time. I'm not even going to say yes or no because the answer is yes. So in a bigger way, these guys are disruptive technologies. They are going to change the way things are going to work. So for God's sakes, this is on my Twitter feed. Read it. And I'm not going to bother asking if you guys bought 1 share or 10 shares. Okay? Because it's seriously. So let's take a look at this, stock chart. Because the fact that everyone's so quiet just tells me I know exactly who bought it and who didn't. And if somebody says, no, I can't buy even 1 share at 28 bucks or 10 shares, which is $280, then I have nothing to say. I can't even draw this chart because it's too new. But I still tried to draw it for you guys. So I told you guys that stock would go here. the stock is going to go to $67. I told you guys to buy it on the first day it came out, between 26 and 27. So even if you don't have it, even if you didn't buy it, fine. Do one thing. Buy it. Actually slap yourself really hard on both cheeks and then buy the goddamn stock. Seriously, guys, okay? Don't be a wuss. So the stock is going higher. Higher. Just on the fact that it is so disruptive. It is so, doesn't matter about earnings, doesn't matter. Another thing's going to happen. What date did this stock come out? What's the date here? Look up here for the date.
Seems like the 13th.
What's the date here, man? I'm even pointing out the direction where you should see the date.
The 6th,
Thank you. 6th of what?
February.
Thank you. What's 30 days from 6th of February? Quick, guys, quick. What is 30 days from the 6th of February? You guys are
March
reading
6th.
something. Jesus. What's wrong with you guys today? You guys like, March 6th. Dominic, remember?
That's gonna be when they're able to sell.
No, when an IPO comes out, there is something called what? You forgot?
The
Quiet
holding
period.
Let
Quiet
Dominic get
period.
there. He knows. It's called the quiet period. So back in the days on Wall Street, when we used to get IPOs, we told our clients straight out, big and small, we got you the stock at IPO, or right after IPO you bought it. It's called the quiet period. That means they can't talk about themselves, they can't announce anything, analysts can't put any buy recommendations on it. It's known as the quiet period. That's the law. SEC regulations. The 30-day quiet period is over on March 6th. What do you think is going to happen? The analysts are going to come out and say, that's it, it's a really shitty company, it's worth $1. They're going to come recommending it, buy. So if the stock is at 50 or 45 or 40, just a normal, trading volume, and the trading ranges, the quiet period gets done. The company's going to come up with blockbuster announcements of what they are doing. All of a sudden, the world's going to know Schrodinger that I told you to buy on February 6th. So guys and gals, whoever's listening to this, let's not be stupid. I'm giving you information that you can make money on every single day. I repeat again, let's not be stupid. Because I am stupid at times, and it makes me really angry at myself. I hope you guys get a little pissed at yourself too, being stupid sometimes. So saying all that, the quiet period is going to get done on March 6th, right around the corner. Coronavirus, Bernie Sanders, whatever negative about the market. This stock is a buy. Now, let's see. You guys are options traders, right? Can somebody tell me what I'm really waiting for?
options to open up for this stock.
Thank you very much. Just the way I did with KRTX. And within 5 days, I bought those calls at 7. I sold them at close to 19. Correct. Now, when the options open up, expect the widespread and all that stuff, because they're not going to be that liquid. They're not Netflix, mom and pop, and not like, oh, I want to buy some Netflix today. I like that show. Nobody's going to know about it, so expect some, spread on the bid. Maybe like $3 to $5. You got to play in the middle to get it, but you got to buy it. That's what I'm waiting for. I'm waiting for options to start trading, and I'm checking every day. I got to find out when it comes. The options normally start trading even sometimes before 30 days. That's all I got to say. Have a great evening. It's going to be a wild ride this week, but you know what you're expecting. That's why we call our charts the visual GPS roadmaps. I'm not trying to, kindergarten you guys, but seriously. There's a megaphone pattern here. This stock is too early for me to do like actual technical stuff. It's not even around for 30 days. But if I say like, these megaphones actually do work, even though time frame is really short, so it's not a really accurate one. I expect the stock to go to 68, 70, and best case scenario, $80. So if I'm giving you something at 50, the options come out, or you buy one share. Forget one share. It's $50, man. Buy 10 shares. if you have a small account. Buy $500. You're going to make $300 on it real fast, just the way I told you guys to buy it at $26, and it went to $50. That's a double in less than 30 days. 100% return on your money. Like they say, that website said, we all talk big, we all want things for free, but we never want to work for it or pay for it. Well, you're not going to make it as a trader if that's your philosophy, which I know it's not. You guys are great. God bless you all. Good night.
Good night.